Now it's time for our newspaper review. Juliet and I are looking at the stories making headlines around the world today. We start with the Moscow Times. It's one of many newspapers, of course, leading on the bomb at Domodedovo Airport. The Moscow-based report quotes an unnamed law official as saying that 3 North Caucasus natives have been placed on the national wanted list after the explosion.
The Irish Times continues to look ahead to imminent national election. An election more likely be called once their crucial finance bill makes its way through Parliament. The ruling party has now struck a deal with main opposition parties to set aside all other business and try to pass the legislation by Thursday.
In Spain, El País has a look at other their government's banking reforms. New rules will be introduced to raise the required level of capital held by banks, a requirement to restore the investment community's faith, it says.
Here in the United Kingdom, the Financial Times carries a piece about the outgoing head of Britain's leading employer organisation, the CBI, accusing the government of failing to present a vision for the country's economic future. Richard Lambert says the government has made a series of decisions for political reasons.
The South China Morning Post reports on new sources of natural gas. A global rush has begun already for shale gas, and the Beijing paper looks at how new techniques could assist China and India.
While the International Herald Tribune examines links between global weather and changes and shrinking Arctic ice. Warmer weather in the north might be the cause of the winter chill in Europe and unusual snowfalls in the United States.
Well, to discuss all that, Juliet and I, joined by Bundeep Singh, Rangar, chairman of IndusView and Indian consultancy. Welcome, as usual. Let's start with the Moscow Times, this dreadful story of the bombing in Moscow, and a reminder, actually, of just how vulnerable Russia's transport system is.
Well, you've seen explosions in the past in train stations and on trains themselves. I guess what's really different about this is that it targets the international traveler. And you look at the airport A, which has access to international airlines. And of course, Russia is preparing itself to host both the Winter Olympics and the World Cup soccer over the next 3 years. And this is a clear signal to international travelers to be extremely cautious.
It's very surprising, isn't it? They haven't done something about security before. I've been to that airport many times, and I've often walked past security. When you arrive on the train from the centre of Moscow, you walk into the airport terminal there, and there's supposed to be security screening. You walk through metal detectors, but actually you can go through another entrance where there's nothing.
You know, I mean, that's just lack security, but there's always a toss-up between extremely tight security and passenger inconvenience. And I guess that's a real challenge for them over the next few days, next few weeks, to make sure the confidence is restored and doesn't start affecting Russia's destination as an investment destination.
Well, that's one of the big issues, isn't it? When we know that actually a lot of investors have been steering clear of Russia over the past couple of years, that the amount of inward investment has been declining, isn't it?
Absolutely, yeah. It's not a good signal for the international community, for sure. And it's tragic.
OK, moving on to Ireland. The saga continues, but it now looks as if they've actually managed to pave the way to get this finance bill cleared. They've set the date for the general election, brought forward now to February.
I think you said it all there. That's really, you know, it's all to do with confidence and a signal for stability. And now they've accelerated the time frame for the elections now to February 25th. This is something that the European Commission wanted, and it's now, you know, the opposition parties have agreed. The voters are now going to decide how much they'll want to share with the Euro brethren that have in some ways bailed them out, and in some ways also what they now owe to for bailing out the banks.
It makes you wonder, though, why anyone would actually want to be the next Irish government, because they're going to have one heck of a task, aren't they?
It's a poison chalice.
Super tough time, absolutely.
And you know, and I suppose the other issue with Ireland is, in the end, does anyone really believe that they're not going to default? Because they're racking up the debt despite all the austerity measures, and whatever you're going to call a default, in the end, they're going to have to do something. Yeah.
Absolutely, and I guess the main thing about this bill being passed is now going to implement all that. The spending cuts, the increase in taxes, and the drop in minimum wage, and the effect of that will be directly on the next government.
So yeah, I mean, you've just come back from India. How are people there viewing what's going on in the Eurozone? They must think it's another world compared to the growth that they're seeing.
It's not seen as an area of high growth, and while we talk about Portuguese and Irish debt, there's a big looming one of Italian debt that's been, you know, getting some attention, but that's you know, that surpasses all the other debt combined. So there's, you know, certainly a look at India, where inflation is high and the price of onions has been in the news, and then you've got Europe, where you've got a two growth economy, Germany leading the way, and some of the Mediterranean and Irish economies really sputtering.
Well, another economy which actually came onto the spotlight was Spain. Another Eurozone economy, yes. And this was Spain. And the speculation was that if another economy did keel, it could be Spain. But they've been working aggressively to counteract that in terms of increasing the money, the reserves on the banks, but looking at very specific banks, the small saving banks.
So Spain's really interesting because it is Europe's 4th largest economy, unlike Ireland, which is 4.4 million people at the end of the day. And Spain has this fabulous fund for the orderly restructuring of banks, and they can take a 25% into savings banks and hold them for 5 years to create stability. The key thing here, of course, as in Ireland, is to implement those economic measures, of those austerity measures. And Spain is now moving ahead to get banks to have a core capital requirement, which is the money they can't touch for any other purpose, and use that against to reduce leverage. And those word leverage is a dollar bill on steroids. You use steroid the dollar bill. It's a vicious circle because not only is lending is asset, so the less your assets get more lending, but growth comes from entrepreneurial, more risk assets, so you have a double whammy effect. You're less lending to growth-inducing products. So that's what they really have to watch out for.
So it's less likely perhaps to win over the credit rating agencies, because at the end of the day they're going to be looking at this and picking through the details. As you said, if they're raising the Tier 1 capital ratio at the same time and not lending, then they're not out of the woods with the ratings.
Especially as house prices are still falling, actually.
Well, so if you look at even their current loan book, the house prices are 40% below where they are. So even against what they have today on their books, they're going to rebalance that, because the risk weighting has not only changed, but it's gone against their current book, the balance sheet.
Let's have a look at the Financial Times. Interesting story. Staying with bad economic news, the outgoing head of the Federation of British Employers of Industry says Lambert attacks government's economic vision in his final speech as head of CBI. So there you are. He's saying actually the government is making cuts in Britain, but actually where's its real vision? Where's its strategy for the future? And I suppose we have to remember this comes after the article about Robert Choate yesterday, who's head of the government's official budget office, pointing out that the government's debt won't be inflated away by inflation. So also pointing out lots of difficulties. It's all looking pretty hard, isn't it, for the UK?
Well, just to your point earlier on, the perception from outside the UK too is that the UK has got a much more expensive place to do business, from whether it's corporate tax, the increase in national insurance, the sort of green-oriented taxes that you have, and of course personal taxes for the upper income earners at 50% doesn't send a great signal when lots of other places in the world, from Singapore, which is reorienting itself as a financial services center, to places in Switzerland are highly competing. Lambert's main point here is, I guess, not just a bad vision, but the lack of a vision. Absolutely.
Strategy as to where Britain is going. Yeah.
And a clear signal, because in the past you had a cool Britannia signal in the market, and you saw things as a consequence of that.
So it's muddled Britannia at the moment.
It's very, very confused and muddled, and not a clear, shiny
let's
Britannia.
now, basically.
It says pretty damningly, doesn't he? They're apparently careless of the damage they might do to business and to job creation. So in other words, they've got a political thought, but not a business thought.
Well, and you see the effect, right? The GDP is now 0.5% a quarter compared to 0.7 the quarter before. So you see the slowdown effect, and again, like other countries in Europe, the austerity measures are kicking in, but that's the antithesis of growth.
Not good, but then again, maybe there's some hope in shale gas.
Not for Britain, but certainly
for somebody.
China and India, two big winners in this one. So shale gas, it's really a question of applying technology to existing reserves, and the prediction, of course, is that the reserves might last for another 250 years.
And potentially bring the wholesale cost of gas down.
They are difficult to get out, though. Shale gas is not as easy, is it, as getting out other types of gas?
It is, and that's why the technology is the key answer here. And you've seen both China and India make moves. They've bought overseas companies in the US, particularly.
Because they've got the dollars to actually fund the research.
Absolutely, and gas is it is not, it's decoupled from oil. So it's at, $4 or something compared to $11-12 it was in 2008. So, and while oil is going the other way around. So you've got not only ample reserves, but also a pricing that works in your favor.
And China's desperate, isn't it, to get gas? You look at the sort of deals it's striking in Central Asia with countries like Kazakhstan. It's very keen to try to get hold of as much fuel as it's going to need to fuel that growth in its economy.
Well, you sort of see Qatar. They don't have any oil. They have gas. And you see what Qatar is doing across the world, buying some very notable assets, of course, but also as a fast-growing economy on the back of that. So gas, I think, holds a lot of promise, and it's less polluting.
Right, but at least we've got a nice fence to fall back on. Ice, not nice.
Yeah, exactly. I guess just very briefly, what do you make of the weather then? Do you think we're in for colder winters? That seems to be what the Herald Tribune's saying.
Well, we're supposed to have one of the coldest winters in Europe in 1,000 years or something. So the greenhouse effect is great for places like Canada, I guess, but not so great for some other places. So this fence could be quite interesting. It's a fascinating article to read, of course.
I'm a skier.
Shangri-La.
Thank you very much indeed for joining us. Very good to see you again. And that's it from the two of us. Stay with us right here on the BBC. There is an awful lot still to come. Bye. Thank you very much. That was great. That was very good.